Well, good day, everybody, and welcome to the VectorVest International User Group Forum. This is Saturday, December 2nd, 2023. I'd like to thank all of you for coming out and spending part of your weekend with us. We have excellent lineup again here. Let me just acknowledge some of the folks that we see in the chat. Looks like people are already busy in the chat. So we've got Wojtek, Gilles from Montreal, Quebec. We've got Mick from Georgia, Jeffrey from Georgia, Athens, Georgia. Paul in Burlington. Yeah, Paul, we have snow coming down here in the Ottawa area where I'm transmitting from. Bill in Lima. Hey, Marty, Newmarket. Basil from Tucson, Arizona. We've got Mike in Waterloo. All right, lots of folks in there. Hey, Tom. Good to see you from Burlington as well. We've got Elizabeth traveling through Mississippi, it looks like. I have a heart in the way. I can't read that one. So you did hear me right. We have snow falling here. We have hit December. We are now in the month of Christmas. So we have a lot to cover here. We're going to start to get going. All right. But thank you. Welcome, everybody. And let's get a move on here. We'll get the slides going. And I will mention to everybody, so this is being recorded. It is on YouTube. So the recording will be available shortly after we're finished, and slides will be going out next week. Here's our risk disclaimer. As everybody knows, there is risk in investing. Everything you see and hear today is provided for educational purposes only and should never be considered as investment advice. The information is designed to empower you to make your own investment decisions, and these decisions are yours and yours alone to make. All right, so now that we have the housekeeping items out of the way, here's our agenda today, folks. So I am, as listed there, Rick Franklin. I'm the Canadian consultant for VectorVest, and it's my honor and pleasure to be with you here today. We will be covering a global market forecast. I'll be covering VectorVest markets around the world. And I am joined by a special guest. I'm sure he needs no introduction in the VectorVest world, Mr. Jerry D'Ambrosio, Manager of Educational Content. He will be covering trade ideas, and I'm sure everybody who's watched Jerry, of course, VectorVest folks know him from the many courses he teaches, Mastering Moving Averages, Uncovering Trends, which is an upcoming course, Trade Like a Pro, and he's also one of the coaches in the Jockey Club.
Thanks, Rick. Great to be here, guys.
All right, and then we have a special keynote presentation from the land down under, Mr. Russell Markham, Director of Education and Training, Asia Pacific, and that is entitled Earnings, Sales, Net Profit Margins. All right, and because of the time difference, Russell couldn't be with us, so when it gets to that, we will kick off a recording that Russell made of that presentation. And then around 12:30, we'll adjourn. As I mentioned on the other slide, you can see the replay information on that slide there. And there's also the information about the slides going out on Monday. All right, so with all of that covered, let's get started here. Oh, yeah, I need to mention that. Luckily, we don't need to talk too much about this. I will not do a better job than Steve Chappell did in the strategy of the week. So to get all the information on the Tampa 2-Day, which is coming up, you can see there January 5th to 6th, 2024 in Tampa, Florida. If you haven't already watched the special presentation or the strategy of the week, do that. Steve Chappell will fill you in with all of the details. Of course, that's VectorVest flagship event of the year. You do not want to miss it. All right, and now we'll get rolling into the global market review. There's a little bit of a delay here, so we should be going full screen on the slides, but here you can see we have Canada and the US to start things off. For this month, folks, I left both months in here. So we could see how the markets did in October. We can see here all the red for the month of October. And here you can see November. And look at those November returns. You can see if we go from the top here, Canada with an 8.17% return, the US 9.37. They led the way. Australia, 4.54%. The EU, 9.18, and the UK, 6.77. So that's year to date. And you can see the November numbers here as well. All right, so a very good month of November. Beat the living you know what out of October, didn't it? All right. So here, if we look at Canada, here you can see our year-to-date number up there. You can see our color guard is one tick into the green. We have guidance reading the color guard is mildly bullish. VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. Our color guards for this month, for this presentation, folks, I don't know when the last time we saw it, but you can see on this screen right now, when we look at the bottom here, there is no red. It's all green, and I can tell you a little spoiler alert, when we get to the next screen, you're going to see the exact same thing. All right, and if you look at the color guard for Canada, folks, it doesn't get, everybody keeps saying how simple the VectorVest system can be. It doesn't really get any simpler than this. You can see in the Canadian market, and you'll see this in the other markets as well, not to the same degree in a few of them. But look at all of our RT Kicker combo confirmed green lights. We've had quite a run up since about the 27th of October. If you've been adding stocks on these days when we've been getting green lights and RT Kicker combo confirmed green lights, you probably built up some pretty good positions and are seeing some really good gains here. So I'll say that for Canada, but you can see when we look at the US, we're seeing the same thing there. They did have a bit of red. We transitioned with 3 days of all yellow in the color guard, whereas the US was a little bit of a different picture. All right. So all guns are blazing. We've got the confirmed calls up in the Canadian market since the 14th of November. The DEW has been up since the 3rd of November. Our green light buyer, it did flash, so it's back up on the 29th of November. And our primary wave, we did get a little a whipsaw just this last week. We had the ability to get a few more with the way the market was consolidating. However, our primary wave is up and has been since the 28th of November. All right, jumping over to the US side. Well, so the one thing missing on the Canadian side that they're already getting on the US side, we are getting close with RT, is getting more than the one green light. We'd really like to see that. So jumping to the US side, you can see they are 3 ticks into the green. And their guidance reads, the color guard is bullish. VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. As I mentioned, 3 green lights. We love to see that. Look at the moves on our BSRs, both Canada and the US on Friday. All right, but you can see, again, there are a lot of green lights in the price column over this period, and RT Kicker combo confirmed green lights. If we look quickly here, you can see confirmed calls in the US. US got it a bit later, 24th of November. DEW's been up since the 3rd of November as well. Green light buyer. since the 29th of November, and the primary wave since the 29th of November as well. All right, so that's Canada and the US. Let's carry on and let's take a look at the other nations in the VectorVest world. All right, so if we jump over to Australia here, you can see Australia's color guard, one tick into the green, and guidance reading the color guard is mildly bullish. VectorVest advocates caution when buying stocks at this time. Australia is one of the ones that's been a little bit tougher. They haven't had the volume of green lights that we have in Canada, the US, and you'll notice the EU as well. All right, more yellow and a bit of red sprinkled in there. So in this time period, they've had 3 green lights, all of them confirmed by the RT Kicker combo system. And it looks like the RT is getting close to getting above 1 here, just like Canada. So a few different situations here, though. Their MTI is below 1. So for that reason, they're in an up-down situation in Australia. And if we just go over all the market timing signals down here, confirmed calls have been up since the 17th of November. The DEW has been up since the 8th of November. Green light buyer, they just got a new green light buyer signal here on the 1st of December. The primary wave has been up since the 30th of November. So in a lot of the markets, we did see some whipsawing in the last week of trading. All right, looking over to the EU. Oh, and I should mention again here, the Australia year to date has a 4.54% return. All right, moving over to the EU with a 9.18%. You can see they've really been moving good as well. We really don't have to keep saying the same thing, but it's just great to see all of these RT Kicker combo green lights. A green light is a good thing, but to have them confirmed is even better, of course. So you can see their color guard is also like the US, 3 ticks into the green. So the guidance would be the same there. And if we take a look, again, everything humming along here good. Their MTI is at 1.47. If we look at the market timing signals, they've been in a confirmed up since the 14th of November. DEW has been up since the 8th of November. Green light buyer has been up since the 29th of November. And their primary wave has been up since the 1st of November. They didn't get a turn down in that signal at all yet. All right, and then moving to the UK, 6.77% year-to-date gain for the VBC UK. They are 2 ticks into the green. Guidance that reads, the color guard is somewhat bullish. VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. Here you can see, so green light in price and the BSR column. So their BSR is looking really good here. They do have RT up. Actually, it looks like RT should be a green light as well. I'm wondering if there was something. Oh, okay, it was the same week over week. All right, so that's why they have the yellow. Not confirmed in both time frames. All right, but again, here you can see up situation confirmed. Here's their confirmed up since the 9th of November. Their DEW has been up since the 7th of November. The green light buyer turned up again on the 1st of December. And their primary wave turned back up on the 1st of December. So a lot of our markets, you're going to see the graphs looking quite the same. The EU and the US are very similar, and then Canada, Australia, and the UK's also look similar as well. All right, so that one is our color guard report. So let's carry on here. All right, here we're looking at our performance of our global market tracking ETFs. On the left side, we have our year to date. So you can see how things are shaking out here. Seems like NASDAQ is typically at the top of the list. Most of the time we're looking here, you can see again, year to date, NASDAQ with a 46.44% return. They're followed by Poland, Greece, Mexico, Spain, and you can see the other ones going down the list. Now in November, if we go to the right here, well, overall, before I hit the right, you can see overall out of the 43, there were 31 winners, 12 losers in this time frame, with an average gain of 10.49%, just beating out the VBC in that time period. All right, and if we jump over to November and see who was moving in the last month, you can see Israel at the top of that list, followed by Mexico, who you can see has been hanging around the top for a while, South Korea, Brazil, who's been in there as well, Germany, the Netherlands, Europe, Taiwan, and New Zealand. All right, and here's Israel with a monthly gain of 16.28%. And here we have our monthly comparison, so you can see, you know, what we showed in October, who was at the top of the list there, compared to who's moved to the top of the list in November. So again, in October, these were the top 5. And I don't think we have any repeats in the top 5 here at all. So we've got a new list with all of those countries we mentioned on the last slide coming into the top here in November. All right, so very interesting to see how we get a bit of geographic rotation here, and it's good to keep an eye on these to try to catch some of these countries as they start moving, and be able to catch them and get into them to take advantage of some of these gains. All right, and the next thing we're going to look at here is the market sector ETFs. So for anybody that doesn't know, you can find these both the global sector or the global market and the sector ETFs are in the US software under cherry picking in the watch list viewer section. All right. So as far as our sector ETFs go, 2023 year to date on the left here, this list hasn't actually changed as far as ranking much. So you can see semiconductors leading the way year to date with a 58.8% gain, followed by S&P 500 tech here with 49.13% gain. You've got US home, you've got commercial services, home builders. Home builders is one of the biggest surprises, I think, for me, with interest rates doing what they've been doing over the last while, but they continue to hang in there on the US side. And here you have XLY, S&P 500 consumer discretionary, rounding out the top 5 here, top 6, I guess. So anywhere from a 58.8% gain to a 32.46% gain. All right. And one of the things I should mention, for those who have watched the strategy of the week, one of the things they'll be unveiling in Tampa is an ETF strategy. So obviously these global and sector ETFs could be benefiting from this strategy that will be unveiled there. All right. Here on the right, I've got the 10-day delta. So who's been moving in the last 10 days? All right, and you can see the top 5 over here are iShares US Home. Again, up there, we've got regional banks, home builders again. We've got real estate, and we've got utilities rounding out the top 5. So anywhere from a 12.3% gain to a 6.6% gain there. All right, taking a look at the essays from around the VectorVest world. Here you can see we had another excellent week of essays. I hope everybody is able to get out there and review and read all of these essays. I hope everybody's aware too that they are able to log into all of the other countries. So with your VectorVest subscription, you can log into any of the VectorVest countries and check out the essays in any of them. All right, so starting with the US, we've got another great essay by Angela Akers. It's entitled The December Almanac. All right, in Canada, we've got Stan Heller writing an essay entitled The New TSX 30 Watch List. In the UK, we are still doing the, in honor of the late, great Dr. David Paul, his essay entitled How to Put Your Emotions and Trading System on the Same Side. Moving down to the EU, we've got Susan Hayes-Culleton. Hers was entitled Update Your Backtests. And then out of Australia, we've got Robert and Russell Markham. Theirs was entitled VectorVest's Fastest Growing Stocks Trading System. All right, so hopefully everybody gets out to check those. And look at that. That's it for me. We'll go to Jerry. We'll try to keep up with the time here, and he'll be covering trade ideas. All right, take it away, Jerry.
Thank you, Rick. Thank you very much. Welcome, everybody. Good morning. Pretty gloomy, not too cold here on the East Coast of the U.S. I want to thank Joey Rodriguez. He's producing us today. He's keeping us on air, giving you guys some good suggestions on how to increase your video quality there. Thank you, Joe, for that suggestion. It's great to be here, guys. So today we are going to discuss a strategy called the NPI, Near Perfect Indicator. Some of you are familiar with it. It's a great technique, great shorter-term trading strategy using some moving averages on our indicators, VectorVest indicators, moving averages on our stop price, on relative timing. So I created a watch list. I'm going to cover about 4 stocks each for the U.S. and Canadian market. So you're looking right now at the U.S. market, and I got 4 stocks in here, and I got a couple of safer picks and a couple of more aggressive selections. I know there's a lot of you guys out there that are willing to take a little bit more risk, as am I. So a couple of stocks at the bottom of the list, maybe a little bit more aggressive. The ones at the top, a little bit safer. So I got a little something for everybody. I'm going to go over the near perfect indicator. We'll pull up the charts. I'll explain the layout. I will add a little more insight to it than just the NPI, kind of approach itself. I can't help myself. A lot of times when I look at a chart, I see things and I have to let you guys know what we're seeing there. So I'll go ahead and do that. But just taking a look at this watch list here, FLT, NBIX, WES, Illumina Inc. 3 of them have buy ratings. 1 has a sell rating. You can see the 2 stocks at the bottom. Both are a little bit overvalued. Fundamentals aren't fantastic. So these are the more aggressive picks, the 2 at the bottom there, and the safer picks, either undervalued or fairly valued. Pretty good fundamentals with FleetCor. Both indicators there, RV, RS above 1, and same thing with NBIX. Both indicators, both relative value, relative safety. Those are our fundamental indicators. Both above 1 is there as well. So let me graph them. And I have the NPI layout on. So what we're looking at here, of course, the price of the stock at the top, The blue indicator at the top is a 5-day moving average on our stop price. The red area here up at the top of the graph is the 40-day moving average on our stop price. Remember, our stop price is already a moving average, right? It's a 13-week moving average. So it's almost a doubles, triple smoothing technique when you add moving averages to a moving average. We do that with the Midas touch as well, right? We add moving averages to our stop price. So those are the indicators at the top, 2 indicators at the bottom here. Well, 3, of course, volume there at the bottom. The red line is a 40-day moving average on relative timing, and the green line is a 5-day moving average on relative timing. So looking at the hard right edge, you could see FleetCor here took a pretty significant pullback recently. September, October, Rick went through what the market did in October. It was a pretty brutal month, but it does look like the downtrend is over. The stock recommendation has transitioned from a hold to a sell back to a hold. It's okay to buy a hold rated stock. It's also okay sometimes to buy a sell rated stock if you're going bottom fishing and again, you're willing to take a little bit more risk. There's a ton of upside with stocks that have not gotten buy ratings yet. But the signal, the true signal just happened recently here. Looking at the hard right edge, the 5-day moving average on RT has just crossed above the 40-day moving average on RT. There's your signal. Also, if I take the 5-day moving average on RT off, I would go as far as to say that the 40-day moving average on RT, the downward slope, the downward trajectory has softened a little bit. Now, the 40-day moving average on RT hasn't quite began its upward slope yet, but it does appear that the downside momentum is dissipating. You could see, obviously, price here over the last couple of weeks and how it's coming off of its recent low pretty nicely. What a great day. Yesterday, I think the stock was up like almost 5.5% yesterday. But the true signal was given, let's see, was it yesterday? True signal was actually given on the 1st. So, I'm sorry, on the 30th, November 30th, which was today, Saturday. So that was Thursday. The signal was given on Thursday. The 5-day moving average on RT crossed above the 40. Of course, with any signal, you're looking for follow through the next day. What I like about this one, and one of the reasons why I selected this trade, is look at the volume there. Let me just back up a day, actually, because on the day of the signal, you could see volume begin to increase. What I also love is during this period of capitulation here, after the significant pullback off of the what is that? September 20th high, you could see the period of capitulation on drying up volume, lower and lower and lower volume during that little mini channel there. Okay, so stock price capitulating on lower volume, then the stock begins to move higher. Volume begins to increase. The 5-day moving average on RT crosses above the 40. There's your signal. The stock price closed on that day at $240.50. That was your confirmation level, November 30th. So with any signal, you look for confirmation the next day. You got to make sure that price moves higher than either the close of the previous day or the high of the previous day. That's up to you. It has to be at least above the close of the previous day. That truly means that the stock is confirming, it's following through the signal that was given on the previous day. And boy, did it. Right? So this is almost a best case scenario. I love when this happens. If my confirmation level is $240.50, $240.50, the ideal situation the following day would be for the price of the stock to actually open below $240.50, because I want to get in. I want my cost basis on a trade like this to be $240 and let's say 60 cents, just a little bit above the previous day's close, right? A little bit above your confirmation level. Well, a less than ideal situation if the stock price gaps up to 242, right, or 243. It's not saying that you can't take the trade, but you're not getting the best price that you could. So in this case, the stock price opened the next day at 239.96, and you can see how it gradually rose above that $240.50 confirmation level. So that's kind of the ideal situation. You got your confirmation level. The next day, the stock opens below it, but gradually rises above it, giving you a really nice cost basis there, very close to your confirmation level. So a great signal. You could see the volume yesterday as well. So a great signal, a ton of upside with this one. I would say now I'm looking in this zone right here, 264, as a potential target area to take profits. You can also use the 5-day moving average on RT to closing below the 40-day moving average on RT. That is a signal for you to either take profits or cut your losses depending on where you stand with that trade. Okay, so love this setup. Again, it's transitioning from a sell to a hold. It seemingly has broken its downtrend. If I take this line away, and I'm using this 264 zone, guys, as resistance. Looks like it's a recent resistance here. So I'm using that zone as my profit target. Any hesitation in that area, you want to look to take gains. I'm going to draw an extended line here, just connecting those lower highs there that we saw. So that downtrend line, you would have drawn if middle of November 13th was the hard right edge. You know, you're looking at that and saying, well, as of the hard right edge, it's got a sell rating. I don't see it setting up yet. 5-day moving average is on RT is below the 40. As of that November 13th date, it's not setting up yet. You can connect those lower highs and create a trend line. And then you had the trend broken, the downtrend broken, and you had your NPI signal there on November 30th again, which was Thursday. So nice trade here. Still some good upside. That 267 zone I would use as my initial profit target. So you got some good upside there. Okay. All right. Next one. Let's see. NBIX. This is a watch list stock. I call this a watch list stock. This is not a trade and again, the signal was given on the 1st of December. I wouldn't have taken the trade the next day. I wouldn't have taken the trade. I'm sorry. Also, November 30th was your signal. You could see my date line there on November 30th. The 5-day moving average just crossed above the 40. If I go back a day, you could see the 5-day moving average on RT was at 0.93. 40-day moving average on RT was at 0.95. You got your signal on November 30th. I would not have taken the trade yesterday. Here, I'm seeing quite a bit of consolidation, right? Let me draw my horizontal line here. Let me back up. I'll back up a little bit. So if, let's say this was the hard right edge, November 28th, you got resistance there. You got a support area right down here. So consolidation after this pretty nice move off of the, what was it, the May, June low. So even though I got my signal on November 30th, I'm looking for price to break above 117, 118. So this is a watch list stock. I'm not taking this trade unless price breaks above that zone. I love it too because volume is increasing. You know, going back to my good buddy Dr. David Paul, volume is key. You know, volume is something that you really have to consider and pay attention to before taking trades. You know, one of the things I learned from him a long time ago was rising price on falling volume is not a bullish signal. So you want to see price rising, but you also want to see volume rising, and that's what we've seen over the last couple of days. So this is a watch list stock for you guys. It's also transitioned into a buy rating recently, so we could see that it's a buy rating. Actually, okay, no, FleetCor didn't get a buy. Still a hold, but that's okay. So love the signal, 5-day moving average crossing above the 40, both on RT, volume increasing. I'm looking for price to break above 118. So put this stock in a watch list. If it breaks above 118, I think we have a nice zone up here about 125 where we may see some hesitation again. Okay, and that could be where you look to take profits. Speaking of taking profits can look two different ways. You can take the whole trade off or take half. If you take half, you're going to raise your stop to your entry price. You're not going to let the stock price fall any further than your cost basis. So if we're fortunate enough to take this trade on a breakout above resistance and we reach our profit target and you take half off, you are not letting the stock fall any further below your cost basis. So that ensures that you walk away with a winning trade, right? You might end up with a wash on the remaining half of the trade that you left on, but you took profits on the first, which is a net win there for you. So love this setup as well. Also, the 5-day moving average on the stop price above the 40, both moving averages sloping upward. Okay, so really good setup there. Here's one that just recently broke out. So here's Western Midstream, oil stock. Oil seems to be recovering a little bit as of late. Increasing volume. There's your signal. November 30th, 5-day moving average. And anytime I move my date line, guys, just look at the values over here on the right-hand side. 5-day moving average on RT, crossing above the 40-day moving average on RT. 5-day moving average on the stop above the 40-day moving average on the stop, both sloping upward as well, right? So if I take off price, you could see the upward slope of both of those moving averages on our stop price. That's, of course, bullish. What I like about this one is it just broke out. Just broke out. So if this was maybe something that I was looking at back here as just a, you know, because you actually got a signal here, right? 5-day moving average crossed above the 40 there on November 20th. I'm not looking to take it just yet. I'm going to, because you can see a little bit of a hesitation at that zone. I'm going to wait for price to break out of that resistance level. It did on strong volume, also transitioned into a buy. Okay. So nice breakout, transition into a buy. This is not a watch list stock. This is a stock that I would trade with follow through tomorrow. So we're looking at a confirmation level of 29.87. By the way, let me go up to the stock above. 118, a break above 118 is your signal with NBIX. With Western Midstream here, we're looking for 29.87. That was yesterday's close. So 29.87. Is my confirmation level for Monday. Breaks above 29.87. Again, ideally, I'd love for it to open below 29.87 and then gradually rise above it, giving you a nice cost basis. So this one's a little bit more of the aggressive selection, I think. Here's Illumina. It's got a sell rating. Well, I'm sorry, it's actually just transitioned into a hold. You can see the hold rating there after it was a sell for a while. Look at the volume, though. Volume is really starting to pick up. Great day Friday, great day yesterday. A little bit more aggressive because the 5-day moving average on the stop is below the 40, but the 5-day moving average on RT has just recently crossed above the 40-day moving average on RT. So a change in the short-term momentum, clearly. And also, let me take off a couple of these indicators. A break in this accelerated downtrend. So the accelerated downtrend, trying to connect as many lower highs as possible. You could see a nice break of that accelerated downtrend that we saw, most of the summer into just this past couple of weeks. Okay, so a nice breakout on strong volume there, a little bit more aggressive, but you can imagine, right, the upside that you have if you're right. If you take this trade, if it goes above 109.79, that is your confirmation level. That was the close of yesterday. Goes above 109.79. I'm going to put support and resistance on. It's hard to tell here. You have some swing lows. I'm sorry, some lower swing highs, but let me put on support and resistance and see if there's truly any. I didn't think I was going to see really any resistance really over the last several months. So what you could consider is using the swing low as your initial stop, okay? And then figuring out what that is. That looks to be about 20 bucks. All right, so that's a pretty significant loss, right? On a $110 stock, you're looking at a $20 loss. That's a pretty significant loss. You want to reduce your position size. You don't want to buy as many shares. You're always keeping the 1 to 2% rule in place, not risking more than 1 to 2% of your overall portfolio value on this trade. So your position size is reduced. In this case, you can't leverage up, unfortunately. So you reduce your position size. But in this case, if I were to lose $20, I want to make at least $20, right? Or at least $30. You want at least a 1-to-1 ratio on the setup. 1.5, 2-to-1 ratio, meaning I can make $2 or I can lose $1, risk reward. So if I can lose 20, I want to make at least 20. And ideally more than that. So you can set a profit target that way. So if $20 is my risk, and let's say my cost basis is right around 110, I'm looking at about 130 at the lowest there, which happens to be that lower swing low that we saw in September. That's kind of your first profit target area, right? Apples to apples, you can lose $20. I want to make at least $20 on the trade. And when you do, you can look to take gains off the table. Then what you do is you raise your stop from the swing low to your cost basis and let the rest of the trade run. Okay, this one's a little bit more aggressive. I want to say that again. It's not as I wouldn't even say some of these others are safer, but they're in stronger uptrends. On all of these, on these other ones here, particularly NBIX and WES, you got the 5-day moving average on the stop price above the 40 and both sloping upwards. So I would say that the bottom one there, Illumina, a little bit more of an aggressive setup for you, but a ton of upside with all of them, I think. Okay. All right. Let me get into the Canadian program. I don't want to miss any questions. Hopefully. Jay's asking, did I take anything yesterday? I did not, Jay. I did not take anything yesterday. The market really rallied later in the afternoon. Wasn't it later in the afternoon? I didn't take any trades yesterday in our swing trading coaching group. I'm not. Yeah, it was kind of later. There's the VectorVest composite yesterday. So no, didn't take any trades yesterday. Okay. Let me go back into the Canada program, and we got 4 stocks in here. 3 of them have buys. 2 of them are a little bit more aggressive. BTO there, it's a gold company. It's got buy rating. DBM, home builders, right? Building home builders there, got a hold rating. Fundamentals on the 2 at the bottom aren't stellar. A little bit more of aggressive, 2 aggressive plays, but the 2 stocks at the bottom pretty good. Both undervalued. Both have really good long-term upside potential. LUG a little bit safer than PSI. All 3 of these stocks are in uptrends, so that's good. So if I graph them all, we're going to stay with the NPI layout. I love this setup. Here's a 1-year chart. So the setup is the same, right? It's just recently transitioned from a hold to a buy. You got the 5-day moving average on RT just crossing above the 40. There's your signal. What I like about this setup, it's not in a very strong uptrend, but it's at the lower end to middle area of this range that we've seen, right, over the last 9 months or so. So I'm looking at about 18 and change as resistance. We're just recently retracing from support. Again, the signal is the 5-day moving average on RT crossing above the 40, and it did so also back on October 13th, right? Same type of situation that we're seeing also happened here. Okay, giving you some upside to that upper end of the range. So good signal there, giving you a really good opportunity for some short-term gains on that NPI signal there on July 13th. Another one there, kind of got faked out a little bit right here. Okay, but still a signal I would have taken. You know, I'm not looking at it and looking at that it would have been a loss and saying, I wouldn't have taken it. Got to be honest with you guys, right? If I'm looking at that as being the hard right edge and I see that signal, a retracement off of support, an NPI bullish crossover, I'm taking that signal. Not every signal is going to work out, as you can see. The swing low was broken, support was broken, so I would have exited, but eventually broke right above there and retraced from support again, giving you another signal, and we're seeing the same situation here. So this is LUG. I like the profit target there at about 18.5. And you can, again, also use our the moving averages here on relative timing as your exit. You're entering the trade when the 5-day moving average on RT crosses above the 40. You can exit when the 5-day moving average on RT crosses below the 40. That is your last line in the sand. But I like resistance as an area to take profits. Okay. Tom is saying, Jerry, can you show us how he? Can't see that. I can't see how the forward this stuff. Oh wait, hold on. No, I can't see that. There's a heart in the way. how I found the stock on November 29th. Sure, I used the scan. So if I go to Unisearch, guys, there's a near perfect indicator folder in here in the Unisearch tool. Okay, so on November, what was that? I said that was no, that was actually just today, December 1st. If I run the scan, what were we looking at? I'm sorry, the day before, 30th. There's LUG right at the top there. Okay, so use the scan. Also go back a couple of days. I think I went back a couple of other days. LUG was another one that I selected. But yeah, use the scans, guys. Use those scans. And this was a couple of days ago, actually, when the crossover occurred. Yeah, we are missing volume. So let me put on volume. Volume a little misleading here. When you get these big, let me zoom in. When you get these big volume spikes, it distorts the rest of the volume. What's the average volume for LUG? Let me see. I can actually put an average volume on. Hold on. There we go. Add parameter. Average volume. 219,500 is the average volume. I'd like actually I want to put it over volume. So let me right click here. So it looks like a little bit lower than average volume here on this one. A little bit lower than average volume. So I'm looking for a nice little, increase in price, of course. We're looking for follow through. I want to see volume pick up on this one before taking the trade. So a little bit lower than average volume here with LUG. Nice spike. So that the setup was for PSI here. Another one where, let me see. This is a watch list stock as well. So here's PSI. Okay. You got strong resistance at about 14.5, right about where the stock price is at now. You do have an NPI signal, the 5-day moving average, and this was on November 30th. I keep having to look at my calendar. November 30th was Thursday. 5-day moving average on RT crossed above the 40 on that day. Volume spiked. Great. I'm looking for not only follow through, we kind of saw a little bit of follow through. Lawrence says PSI is a hammer. Isn't that? PSI is not a hammer. If you're looking at today's candle, I wouldn't necessarily call that a hammer. A hammer is a bottoming pattern. So the stock as of Friday isn't bottoming. That would be more of a hanging man, if anything. A hanging man is the same formation as a hammer, but it appears at the end of an uptrend. Can't really see any on this chart. Yep, hammer is at the bottom of a downtrend. Good job there. Break point. So hammer's at the bottom. I'm just looking at a little hesitation in that zone, right? In that 1450 zone. A little bit lower volume yesterday, but I'm going to look for a breakout. So this is a watch list stock. Put this stock on a watch list. If it breaks above 14.5, maybe about 14.5, this would be a good setup. But I love now the 5-day moving average on RT crossing above the 40 there. So there's your NPI signal. Again, I'm adding a little bit more insight here because not every trade should be taken right away. Even if you get a bullish signal, look at the chart. If you see if you get a bullish signal with any short-term swing trading strategy, and that signal happens to occur when price is stuck or approaching resistance, give it some time to break above that resistance level. Okay, because once, twice, the stock price failed, didn't it? It failed to break above with any significance here in the beginning of November, failed to break above after that big gap up on November 15th. If it fails again, you don't want to be stuck buying at resistance. So just wait for it to break above that resistance zone. Here with BTO, I like this setup too. There's your 40-day moving average on a 5-day moving average on RT, volume increasing and higher than the average recently. So I think this setup was, man, this was a couple of days ago, actually. So this was on November 28th. The 5-day moving average on RT crossed above the 40 there on November 28th. Volume a little bit higher than average. And the stock price has continued to follow through over the next couple of days. And you can see the 5-day moving average increasing. What I love too about this one is the 40-day moving average on RT is sloping upward as well. 5-day moving average on the stop price crossed above the 40. Guys, when I say that, right? When I say I can say a 5-day moving average on anything crossing above a 40-day moving average on anything is a bullish signal. When you got a short-term moving average crossing above a longer-term moving average, that's a bullish signal. Doesn't matter what the moving averages are on, right? So here, with price, if you got a 3-day EMA on price crossing above an 8-day EMA on price, a short-term moving average crossing above a longer-term moving average, not that an 8-day EMA is a long-term moving average, but it's longer than a 3, that's a bullish signal. So these shorter-term moving averages crossing above these longer-term moving averages are bullish signals. So looks like this downtrend is broken here as well. Connecting these lower highs, I mean, it was broken a while ago, but now you're in a nice new emerging uptrend. Also transitioning into a buy with this one on increasing volume. Okay. Yeah, that's right. Unless those moving averages are on the VIX, man. Yeah. Well, look, the more volatile an instrument, the less reliable moving averages are going to be, right? There's DBM. Here's the last one here that we'll look at. Volume increasing, another check mark there that you want to make sure is in place. Just recently, the 5-day moving average on RT has crossed above the 40. With all of these guys, that's your signal. And you can see price basing here, beginning to move higher, volume increasing. It's transitioned into a hold rating. It's not quite a buy, but the transition from a sell to a hold is underway. And I think you got some nice upside with this one as well. Looking at about this area here, this is only a $7 stock. So $7.68, almost a 10% return to overhead resistance. If I go to add parameter, technical analysis, support and resistance again. Well, you actually got I was right there at 770, but you got 711 there as resistance as well. You might want to wait for price to break above $7.11 before you take it. Okay, because then you still got some plenty of upside to $7.70. That's what, 50 cents above on a $7 stock, almost a 10% return there. Okay, so some good selections here. A couple of watch list stocks, guys, that I think you could put in a watch list and wait for price to break out. Come back to this recording over the weekend or Monday. Get those levels in place. Make sure you draw your lines and understand where those confirmation levels are before you take any of these trades. Okay. All right, guys. Well, I'm going to turn things over. I think we're going to move over to Russell's video, and then we're going to finish with Rick. Thank you, Joey, for keeping us on air, and have a great weekend, everybody. And we'll see everybody again soon.
Hi everybody, it's Russell Markham here from VectorVest. I'm the Director of Education for VectorVest Australia. And thank you to Ray Clark and team for having me along. I hope you enjoy this presentation. So without further ado, let's move myself out the way. Earnings, sales and net profit margins, your key ingredients to finding growth stocks. Now, just before I get going, I'll just give you a bit of a brief background behind myself. I've been at VectorVest now for just over 12 years. My background prior to VectorVest, I worked as a financial analyst for 5 years in the oil and gas industry. So I did a lot of net present value cash calculation, bits of analysis there for 5 years, lived behind spreadsheets. And then I thought, well, I'm quite a people's person. I enjoy the numbers, but also enjoy working with people. And I decided to become a financial planner. So I got my Masters of Financial Planning, set off to help those out there with their financial needs, and then came across VectorVest. My father, Robert Markham, introduced me to VectorVest, and the rest was history. I thought, wow, here is a solution, a product here that really gets to help people with their financial needs. Okay, now, just before I get going today, please do note, I'm not licensed to give personal advice. Our license numbers, for those of you in Australia watching, please note our license numbers there. In addition, any advice is general today. I cannot advise you on your personal circumstances. Past performance, not a guarantee of future results. Forecasts or backtests used today are intended as a guide only, and those results may be affected by known or unknown risks and uncertainties, and therefore may differ materially from the results ultimately achieved. All right, with the disclaimer statement out the way, let's get into it. So VectorVest believes in buying rising shares in rising markets and selling falling shares in falling markets. The next set of slides here, or the step that I'm going to cover here, will be to identify the key building blocks applied in this presentation for growth stocks. So today, I'm going to show you how to find some key growth stocks, key things that I look for when investing in shares. All right, so how do we do that using VectorVest? I've got a couple of techniques I want to share with you. First one here, EPS, earnings per share, our 12-month forecast there. So it's a 12 months of earnings per share. VectorVest determines this forecast from a combination of recent earnings performance and traditional fiscal and or calendar year earnings forecasts. Okay, so the key here, it's a 12-month earnings per share. All right, so leading 12-month earnings per share. So we're looking what those earnings will be 12 months out. It's key to identify those stocks that are growing their earnings into the future, at least the forecast as it stacks up. So the first share I want to bring up here is a company called Pro Medicus. It's a healthcare company here in Australia, and to our subscribers who've been holding this long term, you've made a small fortune. All right, and you can see here that the earnings have just continued to track higher and higher and higher, and as a result, the share price has effectively gone up higher, higher and higher. So it's a beautiful share in regards to its earnings profile, but let's dig a bit deeper behind what drives earnings. All right, so VectorVest tracks sales each day of each given stock. It's tracked in millions of dollars. Companies growing their sales are in a position to grow their businesses. So it goes without saying, you need to find a company that is growing its earnings and its sales. So what if I could find a company that's doing both? Now, you can't necessarily always have earnings going up unless you have sales going up, or can you? So let's investigate further and we'll dig a bit more into that. All right, so having a look over here, if I look at Pro Medicus, brilliant set of sales in millions here. You can see it's gone from what's that, about 40 million in sales all the way up to 120, up 300% since 2018. Very impressive sales. All right. The next step then is to say, well, if I have some good sales, does that necessarily mean that the business is profitable? So let me boil it down to a very simple analogy or example here. Let me pick on, let's say, a coffee shop. Let's say you and I ran a coffee shop. And I said to you, and I came in to check in how the business was going. Let's pretend you're the chief financial officer and I'm the general manager. And I came in to say, well, how's the coffee shop going? And you say, well, yeah, it's not too bad. We're doing 1,000 cups of coffee a day. And I go, wow, that's impressive. But then I dig in a bit deeper into the numbers and you say, well, yeah, sure, we're doing 1,000 cups of coffee a day, but we're only making 0.5 cent margin on each cup of coffee sold. In other words, after all the expenses, paying for the beans, the hot water, the electricity, whatever, the rental space where we're selling the coffee, whatever it might be, the cups, whatever it might be, our profit after each cup of coffee is 0.5 cent per cup of coffee. I'd have to say as a general manager, it's not going too well. 0.5 cent across 1,000 cups of coffee is not really going to pay the rent and our wages. Okay, so what we want to be growing sales and also be profitable. So if I went back to the example again. And this time around, as a general manager, I came and said, how are things going to you, the chief financial officer? And you said to me, well, yeah, things are pretty good. We've sold 1,000 cups of coffee a day on average. And I go, okay, and what are you making per cup of coffee? Well, actually, really good news here to report. We're doing $6 per cup of coffee. Yeah, we found this special type of ingredient, and the way we market it, we put a little, I don't know, maybe put some cinnamon on the top or whatever it might be to create that value to that cup of coffee. And all of a sudden, your coffee buyer is prepared to pay $10 for a cup of coffee, from which you then make $7 margin. Wow. And all of a sudden, 1,000 cups of coffee a day at $7 profit. It's a very profitable little business there. All right. So that's what we're trying to find equivalent in shares. So what are the sales doing and what is the margin? Now, in share world, so to speak, with shares, you'll see that different companies have different profit margins. Now, just because you might have a low profit margin doesn't necessarily mean you're not a great business. All right, so take, for example, here in Australia, we've got a big a food company there called Woolworths. Woolworths is one of our major suppliers there of staples, food products, milk, bread, all that type of thing, a big shopping centre type equivalent type stock. At Woolworths, you're lucky if you're getting 2 to 3% margin per sale as that business model, but they're doing hundreds of millions of dollars a year. So that's how they sustain the business, and that's why they're a successful big business. All right. Now, in this example here for this pharmaceutical company, not only are they doing good sales, as we saw earlier, if we just go back here, look, sales, so you're doing $120 million in sales, and then for every $1 of sales that you're doing, you're getting about 60 cents profit, right? So that after all the overheads, all the costs, you're taking in about 60 cents per every $1 of sales. So you're doing $120 million worth of sales, and of that, you're keeping about 60% as pure profit. That's a very lucrative business. So you can see, when we then go and put it all together, we find those companies that are growing their earnings by ensuring that the companies are growing their sales and they have a good net profit margin. Now, in this case, when I say good net profit margin, you want to make sure the net profit margin is steady or maintaining or growing. All right. You can have a very successful business that's doing 2 or 3% net profit margin, as long as it maintains around about that 2 to 3%, if not going up. You don't want a business that's doing 2 or 3% and then drops down to 1%. That's not going to be too good for the business. All right. So the key there that I'm noting there, ensure that the net profit margins are steady or rising. All right. And then putting it all together, you can see over here, that rising set of earnings, and it's backed up by consistent sales rising up here, and your net profit margin's been pretty steady and rising. It's gone from what was at 40 cents in the dollar in 2018 all the way up to 60 cents in the dollar in 2023. Very impressive indeed. So it's a money-making company at the moment. Now, keep a lookout for the following. This is where it gets very interesting. Here is another company, and we'll get into different examples from around the world shortly. But here's another example in Australia. GDG is the ticker code, Generation Development, I think it is, Financials and Diversified. And you can see over here, look at that, sales are falling. All right, so to me, that is a little bit of a warning. I go, well, okay, why are sales dropping? Now, if I drill in a bit further, I go, well, hang on, earnings are going up. So hang on, let me get this right. Sales are falling, but earnings are going up. What's going on here? Well, obviously, they must be then developing better margin. So although you're selling less, all right, you're selling less. If your margin is higher for every $1 of sale, and there it is, there's the net profit margin, okay, up goes effectively the net profit margin. That net profit margin helps to make up for the drop in sales, which in turn drives the earnings. Now, net profit margin, all right, it's the definition of that. All right, so let me bring up a slide on that. I'll go one step further. So here we are on investopedia.com. What is net profit margin? All right. And anyway, scrolling down here, net profit margin, or simply net margin, measures how much income or profit is generated as a percentage of revenue. It's a ratio of net profits to revenues for a company or business segment. So for every $1 of sales that you make, for example, then what are you getting in terms of the profit? It's often expressed as a percentage. So net profit margin is typically expressed as a percentage, but can also be represented in decimal form. Net profit margin illustrates how much of each dollar in revenues is collected by a company, which translates into profit. Okay, so just coming back to our slide sets here, can a company continue to rely on a high net profit margin? Avoid companies with falling net profit margin and earnings. So a company can be growing its sales, but net profit margin is falling and earnings is falling. All right, so there's no point growing your sales if your net profit margin is falling. Well, not always, because in some circumstances it's okay. You're still profitable. You're just not as profitable, but you've got to be careful that net profit margin doesn't start eroding dramatically, because then you're going to be doing a whole lot of work with very little return. If the net profit margin erodes all the way down close to, say, 0%, then effectively, you're selling a whole lot at no real margin. All right, so we need to be mindful of that. We need to be mindful of how much is net profit margin falling, how much is this impacting earnings. All right, to give you an example here, Woodside Energy Group, it's a big mining company here in Australia, very popular. It's well known, but you can see in recent times it hasn't done particularly well. Why? Well, because the earnings have been under pressure. Why have earnings been under pressure? Well, you can see the net profit margin's gone from a whopping 60 cents on the dollar, that's phenomenal, all the way down to 20 cents on the dollar. Now, nobody's going to complain with 20 cents on the dollar. It's still a very good margin, but it's dropped all the way from 60 down to 20. So it's impacting the valuation of their company. It's impacting the confidence of investors, and it's driving those earnings lower, which in turn is driving the share price lower. So in this particular case here, the uplift in sales have not been enough to offset the drop in net profit margin. You can see sales have gone from 15,000 million to 25,000 million, but net profit margin has fallen from 60 cents on the dollar down to about 20 cents on the dollar. All right, it's just that the sales have not been enough to offset the drop in the net profit margin. As a result, earnings are under pressure. Okay, so falling net profit margin requires higher sales to maintain profitability. Can a company sustain higher sales to offset net profit margin? In this particular case here, no, it hasn't been enough. It just hasn't been enough to get those earnings firing up. All right. So, for Woodside, coming back to Woodside here, the way out of this to grow the earnings again is to start getting higher margin. Why has it fallen from 60 cents on the dollar down to 20 cents a dollar? And again, if you do a bit of research into the company, you can start to look as to why that might be taking place. And in big mining type companies, they often have forward contracts where they're selling, at a spot price, but they lock it in, they hedge it forward going 12 months. And in this particular case, maybe they've locked in a hedge price, and the spot price has shot up even higher because there's more and more demand. And in return, maybe they've experienced, hidden costs to mining coal or whatever it might be that they're in the business of, and it's starting to impact them. So they're not able to pass on those costs because they've locked in a forward contract where they have to deliver X number of tons or whatever it is at a certain price of coal or gas or whatever it might be. And the fixed costs have gone up, and the variable costs have gone up to doing business, and they haven't been able to pass it on because they're in a contract. And that's the danger of locking something forward, hedging it forward. It might look good now, but if your costs move up down the track and you're not able to pass those on, you can get caught out. Now, I don't know whether that's the case for this company here, but it's an example of where companies can get caught out in the mining game. All right, moving forward a bit here, let's have a look. So falling NPM requires higher sales to maintain profitability. Can a company sustain its higher sales to offset that falling net profit margin? Well, turning to a retailer, a big one here in Australia, a very well-known one, Wesfarmers, WES is the ticker code in VectorVest Australia. Consumer discretionary retailing sector/category sector it's in, industry. And you can see over here, earnings are going up, but net profit margin is falling. Now, bearing in mind in retail, a 5 or 6% margin is very, very good. So it's come from about a 7% margin all the way down to about a 5.5%. It might not seem much, but as a percentage, that's a fair fall. That's effectively, what's that, 1.5 on 7. What's that as a percentage? Yeah, it's dropped its margin around about 20%. All right, so the margin's fallen away 20%, but you can see sales have gone from about 35,000 million here, and they've gone up to, what's that, about 45, 50 million. All right, so they're able to effectively keep their earnings holding up by effectively increasing their sales. Now, there might be very good reasons for net profit margins falling in retail, for example. Some companies might be wanting to gain a bigger market share. So what they do is they'll go, okay, well, you know what, we'll be more competitive. We won't make as big a margin. And what we're hoping to do is attract more buyers. We get them coming in, becoming more loyal. And then over time, once we build up more and more clientele, customers using our services, coming to buy goods and services from us. And then once we've built that loyalty over time, we can then start increasing the margins. Consumers are not silly. If they increase the margins too much, then the very reasons that drew them into doing business with the company and the loyalty will drive them out. So you've got this balancing act. I don't know whether that's the case with Wesfarmers. It might be at the board level to say, look, make prices more competitive, get more people coming in through our front door, so to speak, and then over time we can increase the net profit margin. Now, if that plays out in this example, let's say, sales drive up massively, and then they just tweak the net profit margin from, say, 5.5 cents to 6 cents in the dollar. So the average consumer would barely see that. But because they've got higher sales, they could drive those earnings higher. Maybe that's a strategy. I don't know. I'm just guessing, but I'm just telling you the mechanics behind some of those strategies. Now, as a investor, buying shares, I want to see my earnings going up, my sales going up, and my net profit margin going up, because that way it's all working in my favor. When I'm seeing this, right, it's the old adage coming back, will an increase in sales continue to sustain those earnings? And the example prior, the increase in sales wasn't enough. All right, and maybe if the net profit margin keeps falling further, it's going to start to impact those sales. All right, or maybe sales might start slowing down, and then you've got a double whammy effect. You've got dropping sales and a dropping net profit margin, and then watch out, earnings will fall and share price will follow suit. All right, so we want all three in our favor. All right, moving on here. So just make sure I'm going to skip the slide. So the global standouts. So what I did is I got busy in VectorVest. I went across all the different countries there that we offer you in VectorVest to identify some of the best global standouts. Now, I am aware of the fact that this is an international forum. So, we're going to have investors from Australia, Europe, UK, Canada, and the likes. And you might be saying to yourself, well, it's all very well, you've given me some Australian examples, but what about some Canadian stocks or US stocks or European stocks? So I got to work, and I'm not saying that the ones I'm going to show you now are the best. These are the ones that jumped out to me. I thought they were pretty good. But what I'd recommend you do is apply this methodology in your market and see if you can find ones that are better, and shortlist, put into a watch list and shortlist the ones that really jump out to you, okay, using this methodology. So let's identify some of the global standouts across EPS, sales, and net profit margin. And what I'll do at the end today is I'm going to make it very easy by showing you how to build a quick uni search to do this for you. All right, so here we go. I'll start off with Canada. All right, first one there, Hammond Power. Look at this brilliant share price. It's gone up massively since 2021, end of 21. Look at the earnings, the engine room there, and you can see sales are growing, beautiful rising set of sales, and look at the net profit margin. it just keeps tracking higher and higher and higher. This is what I want to see as an investor. Rising sales, rising margin, rising earnings, rising share price. There's not much really not to like about that profile as it stands right now. And in spite of some of the market volatility over the last year or so, you'd barely have noticed it in this company. Okay, a little bit of a pullback here, but it made up for it significantly thereafter. All right, next one here, Stella-Jones. So, just the first one here, this was electronics, all right? And this one here is building wood products, Stella-Jones. Certainly had stellar earnings, stellar sales, stellar net profit margin. And, it's doing incredibly well. So a very smooth profile there across those key metrics. Next one here, Dollarama. Net profit margin, you can see it sort of bounces around a bit, but who's complaining when it's bouncing between, looks like about 17, 18% up to about 19%. It sort of bounces a little bit, but the general trend is up, if not steady and holding. And it's a very nice margin indeed, 19 cents on the dollar. That's a pretty profitable business, and it's growing its sales. Look at the sales, it just keeps stepping up, stepping up, stepping up. And as a result, look at those earnings. Textbook left to right, upward trending profile. And that's a very nice, smooth left to right price pattern. Certainly one that jumped out to me. All right, let's turn to the US. All right, now there were plenty in the US, and I've just had to pick a few that jumped out. Broadcom Limited, electronics, semiconductor, and manufacturing. We all know the story behind semiconductors. Semiconductor business has been booming over the last 18 months. And you might have read some of the weekly essays from our different managing directors from around all the different countries there. And it's certainly been a theme that's been discussed. I certainly know in Australia we've written one or two essays on that, on semiconductors. And the US and Taiwan, are key in that semiconductor space. And here's a great example in Australia, or should I say in the US, AVGO, Broadcom Limited. Beautiful earnings, sales are rising. Look at that net profit margin, phenomenal. Over 40 cents on the dollar. That for every $1 of sales, over 40 cents on the dollar, that company makes as profit. That's a money-making machine right now. How many businesses out there do you know that would do 30,000 million in sales and make over 40 cents in the dollar profit, over 40%? That's clear profit in the hand after all costs. 40 cents in the dollar. That is an incredibly lucrative business model as I see it right now. And it's no surprises to see the shares gone from $200 to $1,000 a share, US. All right, moving on. Another one that really jumps out there, Synopsys Incorporated, computer graphics. Look at this. Look at the earnings and the sales, just textbook. And look at the net profit margin, gone from about 20 cents in the dollar back in 2017 to now over 30 cents in the dollar. So up 30% in the last couple of years, with sales that just continue to power higher and higher. And look at those earnings, just textbook. And what's this one gone from back in 2017 at, what was that, about $70, $80 a share to over $500 a share. That's certainly one there that is on my shortlist to investigate further. It's a real global standout there in the US across earnings, sales, and net profit margin. All right, moving on. AJG, Art Gallagher. Did I pronounce it correctly? Insurance brokers. And well, there's certainly nothing broke about this company. Brokers. Sorry, play on the words there. But the earnings are textbook. Again, just absolute textbook. A little bit of flatline time periods here where it's sort of just held steady, but that's okay. As long as it's holding steady and growing there, held steady a little bit and then up it went again. Sales, just up they go. And net profit margin. Looks like this insurance broker here must be selling some pretty profitable offerings there, because back in 2017 it was about 10 cents on the dollar, all the way up now to 20 cents on the dollar. So they've effectively doubled their net profit margin since 2017 and growing their sales. So it's no surprises to see it go from $50 odd to $250 in the last couple of years. They look like they're doing a smart operation there, making some good money. All right, LPG. Dorian LPG Limited, transportation, looks like shipping, bracket ship. All right, so shipping, earnings going up, sales going up. Net profit margin is a little bit, it bounces around a bit, but remember I said steady and or rising, and this is pretty steady. So you can see they've done anywhere between 20 to 30% typically in the last couple of years, and then recently all the way up to 40 cents in the dollar. So they've become very lucrative in recent times in terms of their business model. They really are learning to make more and more money with the services that they offer here. And you can see those earnings really starting to power up big time here too. So you can see what's that gone from, what, $15 odd back in March of 22 all the way up to 45. As long as sales and net profit margin keep growing, or at least if net profit margin holds steady and sales grows, you can see this really powering on. But, again, nobody can tell you definitively, right now, that's how it stands out. Log into VectorVest each and every day and just double check your earnings and your sales and your net profit margin. Okay, coming into the UK here, Bay Systems PLC, aerospace and defense. Brilliant set of earnings. Sales are ramping up. And although the net profit margin's bounced around a bit, it's been steady, and it's hovered between about what's that, about 8.5 to 9. And it's really stood out. It's growing. It's gone up very nicely in the last couple of years there. All right, usergroup PLC, utility gas. All right, really cooking with gas. I mean, look at this. Up go the earnings. Huge uplift in the sales, gone from what's that, about 200 million to 300 million in the last year or so. And the net profit margin's gone from 2 cents all the way up to 6 cents in the dollar. So they've increased their net profit margin threefold, and they've grown their sales by 30 odd %. Look at the earnings as a result. Look at the share price. All right, next one here, four Imprints Group, business sync, is it sync printing or systems, is it? So it's in the printing game, and earnings going up, sales going up, and net profit margin there gone from about 4 cents in the dollar all the way up to 8 cents in the dollar. And as a result, that's really helped drive that business. You can see it's under a little bit of pressure currently with the share price sort of falling away a bit. But, as far as I'm concerned, I'm seeing the earnings holding up, sales are holding up, net profit margin holding up. And, I'll be watching that closely. I would anticipate that to start rising again shortly. All right, XPS, pensions, financial and management, again, growing the earnings. Look at the sales, big uplift in the sales. And wow, look at the net profit margin. That really jumped out at me. It's gone from 15 cents in the dollar or pence in the pound in this example, all the way up to 18. So, big uplift in recent times here on that net profit margin. That really caught my attention. Uplift in sales, big uplift in the net profit margin, and you can see that turnaround going on up there. Coming to Australia here, West Gold Resources, another mining company, great rising set of earnings in recent times, big uplift in the sales, and net profit margins pretty much come from about 5 cents in the dollar all the way up there to about 12 cents. So doubled their net profit margin. Share price has been a little bit sort of volatile at times. It's not bad. The general trend is going up, but I really like earnings, sales, and net profit margin. This is typical of a mining company. It sort of comes in waves, but as long as that all holds up, I anticipate this to continue rising. Doug Technology, info technology, software and services, and another success story in the info technology game. Look at those earnings. Look at the sales. Sales were what 40,000 million, is it, all the way up to 80. Millions, this is millions, 40 odd million, all the way up to 80 million. And look at the net profit margin, all the way up there to 20 cents in the dollar, and you can see prior to that, it was pretty much below zero at one stage. So it wasn't profitable, and it's turned it around. TPC, Console Telecommunication Services, brilliant set of earnings arising there. Sales are tracking up, a little bit of a dip to the downside. It kind of went up and then it's sort of consolidating, but you can't help but admiring the net profit margin. Very nice net profit margin there. Okay, and there is the one Pro Medicus, the one we brought up right at the start. Again, look at that. That's 60 cents on the dollar, 100 million in sales, and those earnings are going up nicely. Now, what I've done here, the last thing I'll leave you with before we get into Europe, and just don't let me forget, at the end, I'm going to show you how you can do this in a uni search. All right, but before we do that, let's go to Europe. So Europe here, what's this ticker code? EKTER, is it? Hector SA, building, heavy construction, big uplift in the earnings, big uplift in the sales, big uplift in the net profit margin. You can see in recent days how it's shot up. All right, Buzzy, Unichem, building, cement, sales are tracking up higher, net profit margin. This was what really got me interested. It went from about 10% all the way up to just on 20%. So, you know, very, very lucrative in terms of the net profit margin, turning things around. RHM ticker code for this one here. Metal products, is it? Fasteners, big uplift in the earnings. Sales are really jacking up big time, along with the net profit margins come from about 5 all the way up to 10%. All right. 8TI. And this one here, very good set of earnings again, really on its way. A little bit volatile on the price, but you know, the earnings are top notch, the sales are growing, and the net profit margins are growing. So that one there jumped out at me as well. All right, so what I've done here, I've just made sure I put the screenshot in. What you can do in UniSearch and VectorVest is you can come in and you can build this for yourself each and every day. Really easy to do. So just to clarify, the sales are in millions. All right, so if you see 80, it's actually 80 million for the sales, just to clarify on that. So if I mispronounce anything prior, just be aware it's in millions. So whatever the number is, and then you add 6 zeros onto it, okay? Because VectorVest lists the sales figure there in millions, all right? And what I did here is I built as follows. Net profit margin delta over the last 260 weeks, which is 5 years, greater than 100%. I did the same for sales and earnings. So let me show you how I did that. So what I'm going to do here is I'm going to show you how I built that uni search. So it's nice and easy. We just create a new search. All right, so we're going to create a new search, have a blank canvas, so to speak. Click on the parameter box, hover over stocks, and then hover over VectorVest fields. And then what you need to do here is you just need to scroll down until you find net profit margin. All right, so there it is. Okay, so stocks, VectorVest fields, hover down, and then scroll down until you find net profit margin. In the operator, I'm going to set it to being delta. So we're going to look for a change taking place. And then in the value, all I'm going to do here is I'm going to set it for 260 changes from days to weeks. That's 5 years. So a nice track record. And then in here, I'll say greater than or equal to, and I'll set this at being 100. So I want my net profit margin to have doubled over the last 5 years. And then I'll repeat the process this time around: stocks, sales, market capitalization, and I'll click on sales in millions. Same deal again, delta, and the value, right? I'll then change it to 260, same deal again, weeks, and in here, greater than or equal to, and then put in 100. So double their sales over the last 5 years. And then, yep, you got it, the final one, earnings. So stocks, capital appreciation, EPS, delta, 260 weeks. And in here, greater than or equal to 100. So we've doubled them as well. We've doubled earnings over the last 5 years, sales and net profit margin. I'll keep the sort by VST in descending order. And look at this, I run the search as of the 24th of November. I know this is Australia date format, so that's date, month, year, all right. Of course, in the US, you'd have you wouldn't have it in that layout, so I do apologize for our international viewers. I've set it on the Australia date, month, year format. And here we go. If I put on the graph and I pull that back over 5 years, and look at this. Right, so the earnings have doubled over 5 years, sales have doubled, and net profit margin has doubled. And look at that share price. I'll just clean this up a tad here just to make it a little bit easier for you to see. All right, so you get the picture. That's what we're looking for. These companies that are growing earnings, sales, and net profit margins. Some brilliant companies in that list there. if I go back to the start of the year, just to show you how it's worked, all right, so where was the first trading day in the US? The 3rd of January. All right, I push on OK and I run the search. And here are the stocks that are brought back. And you can see when you do this, you'll get the delta, the changes taking place over that time period for the net profit margin. You'll get it for the sales, and you'll also get it for the earnings. So it gives you a very good snapshot. And what I'll do here is I'll quick test, let's say, the top 20 from the 3rd of January. All right, and look at this, total returns there of 18%. Some phenomenal ones here, and one or two that didn't work out. So some phenomenal returns, 18% returns compared to the market, which did a pretty good return there at 7.8%. All right, so all up, very good indeed. So thanks for having me along. I hope you got a lot out of the International Forum today on this presentation. These are some of the things that I look at when investing for my growth stocks. Feel free to email me, russellmarkham@vectorvest.com. Hope you got a lot out of it. Thanks again to Ray, Clark, and the team for having me along. And yeah, drop us an email sometime. All right, until we meet next, bye for now.
Good to go. All right. Well, folks, I hope everybody enjoyed that. I would like to thank Russell Markham. That was an excellent presentation. And also, unfortunately, Jerry wasn't able to stay with us, but I'd like to thank him too for the trade ideas. That was great as well. And folks, the I guess modern technology and Joey's coordination, we were able to do live presentations and Russell's recording and still get within the 12:30 time frame. So gotta love that. I'm going to advance here in the slides to finish us out. So I would like to thank everybody, our presenters, as I said, Jerry and Russell, and Joey for all the coordination there, and everybody in VectorVest for everything they did as part of this. I did see, again, that it's amazing how international this presentation is. I saw, not only people from VectorVest countries, but people from Nigeria and other places in the world. And I did want to make sure when we get to our last slide here, I did see Thomas. Thomas, you had a comment in there that you need step-by-step directions on how to install VectorVest. So I'm on our final slide here. Again, I'd like to thank everybody for watching. Now, Thomas and anybody else who needs any support at all, do not hesitate to call our terrific support staff, our product support and training staff. There you have the number, 1-888-658-7638. You also can see the international numbers there if you happen to be somewhere else in the world. All right, so make sure you call in, get that help. They'll take you through the setup. They'll even help you build a watch list of stocks you own or want to own, and take you through the whole beginning, getting going with VectorVest. All right. So as we said, replay, this is on YouTube. I did see some questions there. So this will be available shortly after it's done on the VectorVest YouTube channel. All right, the slides will be emailed out Monday. We also have the support email down at the bottom of our screen. And we are always looking for ideas. This is your international user group forum. We're looking for ideas. So you've got Ray Clark's email address at the bottom. If you have any ideas of what you want to see covered in these forums, don't hesitate to email Ray with those ideas. All right, but thank you all for coming out. Yeah, you're welcome. Everybody giving thanks there, and thank you for coming and sharing part of your weekend with us. All right, that will be it for now. There won't be an international online forum for January because of the Tampa 2-Day. So we'll join you back here in February. All right, take care. Have a good day. Have a good rest of your weekend, folks. Bye for now.